Right, guys. Hi, Zaheer Anwari here on behalf of the dynamictrader.com. Hope you're doing well. Can I get a quick hello, hi? Let me know if you can hear me, whether you can see my screen okay. Administrator, yep, brilliant. Thank you, Adinda. Right, thank you very much. Okay, guys. Yep, okay, fantastic. If you guys can all give me a quick hello, let me know who's out there, let me know who's listening. I'd appreciate that. Powell, thank you very much. Thanks for coming in. Appreciate the hello. If there's anyone else out there, please drop me a quick hello. Some really interesting moves going on in the market, guys. I've been doing these FX Street webinars for quite a long time, and I would say for the better part of a year, I've really been telling people to be patient, to hold your positions, don't get too involved in the market, try and stay away from intraday noise. That's not how the money's made. Try and look at the bigger picture, look at the trends. If you're tuning into my webinar for the first time, my name is Zaheer Anwari. I am a long-term trend trader. I trade foreign exchange, I trade stocks, I trade commodities, I trade all the markets. And I encourage you guys to also do the same. Don't just focus on FX, don't just focus on foreign exchange, because money moves from market to market. Go to where the trends are. A real trader, one that wants to achieve growth, one that wants to achieve substantial account sizes, a real trader with a business sense will focus across all the markets. Those traders who are just wanting a bit of money and maybe don't even have money and are trying to make money from the markets, they're the ones that are going to focus on foreign exchange, because foreign exchange is advertised as the way to making quick riches. You can't make money if you haven't got money. That's the bottom line when it comes to trading. You need to have a starting pot, and you need to have a decent starting pot, but also you need to have a business mindset and a business ethic with trading. And you want to focus across all the markets and really understand what trading is all about. Okay. Before I get into the charts, guys, if you want to know more about my approach, about the community, about the software, training, specifically in trend trading, if you're tired of the day trading and lifestyle and the short-term trading, and you want something that's more consistent, more profitable, then please check out the following website, trendtrader.pro/app. Okay, let's go into the charts. Let's have a look at what's been going on. Okay, can you guys see my e-signal, please? Can I just get a hands up that you can see my charting packages and you can see my charts? Okay, brilliant. Thank you, Adinda. Right. So what you can see is the watch list on the left-hand side. So Aussie dollar, US dollar, going all the way down to the South African rand, Japanese yen. You've got the monthly chart with the major levels of support and resistance. Now, in my previous webinar last week, I actually explained how I look for support and resistance. So if you haven't watched last week's webinar, I suggest you go into the archives, the FX Street archives. I'm pretty sure it's out on the YouTube channel. Maybe Adinda can confirm that. But if you want to understand how I look for support and resistance, and if you want to understand the logic behind this proprietary tool of mine where you can see the green and the red lines, then please check last week's webinar. Also, these pink lines here, they represent the high and the low and the closing price of the previous calendar year. So as we're in 2016, this is the high of 2015 and the low of 2015. Remember, guys, that's January to December 2015. Again, I go into detail on how I use these pink lines. But in short, what I'm looking for is price to either be above the high, so price has a bullish bias, and this is where I'm looking for long opportunities, or I'm looking for price to be trading below the low, where price has a bearish bias, and I'm looking for shorting opportunities. If price is inside the pink lines, I do two things. I either stand aside because the market could be in consolidation, or if I'm looking to take any trades because the market is in trend, I reduce my risk. So if you look at the US dollar, Canadian dollar, you can see that it's trending to the downside. And so for that reason, if I decided to take any trades, I would reduce my risk. Whereas if you look at the Aussie dollar, US dollar, it's very much going sideways, nothing really much happening. And so this is not an environment that I want to be trading. On the weekly and the daily below, I have the 200 moving averages on both, which is the black line, and I have the 50 moving averages on both, which is the blue line. What I'm looking for is alignment. That is when the weekly and the daily are moving in the same direction. And the simplest way to look at this is that in a strong bear market, I want to be below both these moving averages in a strong bear market, and that is on the weekly and the daily time frame. In a strong bull market, I want to be above both these moving averages on the weekly and the daily. If I have any other combination, then generally what I'm looking to do is stand aside, or if the market is in trend, I reduce my risk. Now, full allocation of risk, when all my factors, all my criteria has been met, full allocation of risk is 2%. But remember, I hold these positions for weeks and months at a time. In foreign exchange, on average, I hold positions for 8 to 9 months. Stocks, I've held trades for up to 13 months. So you can, and I repeatedly compound as well. So an initial 2% risk, if it's a losing trade, it's only 2%. But if it's a winning trade, it will go on to give me substantial growth. And that's all through compounding as well. Okay, so when I don't have my full checklist, I then reduce my risk 1%, 0.5%, 0.25%. It depends on the situation. Okay, so looking at the monthly chart, this is the Aussie dollar, US dollar. You can see that price is in a bearish trend, but the way it moves is that it goes through prolonged periods of consolidation. There's one right there, and that is at the round number 0.90. This is going through a prolonged period of consolidation, and that's using 0.70 round number as a level of support. So this is not the easiest to trade because it does go through periods of consolidation. So for this reason, the Aussie dollar US dollar is not very attractive. In addition, below the 200, above the 50, below the 50, above the 200. So there's no alignment either between the weekly and the daily time frame. And so for this reason, the Aussie dollar, US dollar is not a currency that I'm looking to get involved in anytime soon. Okay. Let's have a look at what's happening across some of the other currencies. Aussie dollar, New Zealand dollar. Now, this was the last time I traded the Aussie dollar, New Zealand dollar, which was back in 2013, 2014. You can see a very profitable move to the downside. Since then, it's just been going through an area of consolidation. And this is not an environment that I would want to get caught up in. However, we are seeing weakness to the downside. It's below the close, but it is trending. You can see we've had 3 months of weakness to the downside. It's currently struggling to break through this support level. And this is the support level from 2014. And you can see that price tried to break through it earlier this month, but has since been pushed back above it. So this level is a proven level of support, and we can see price is struggling. However, as a long-term trend is bearish, I favor a breakout to the downside. So what we now need to see is price break and close below this level. And then if it offers us an opportunity, we can look to take short trades. But remember, we've got a support level here, which is also the major figure 1. So when you get to this level, this is where you'd want to manage your stop. All right, so looking at the weekly, we're below the weekly 200, below the 50, below the daily 200, below the 50. So you can see that we have alignment in terms of the moving averages, below both these moving averages, below both these moving averages. We've also got a death cross taking place on the daily time frame. But having said that, it's just kind of going sideways, really. There's not really much going on in terms of real trend. Like this here is a trend. You can see a nice clean trend to the downside. This is a trend. That's when I was last trading the Aussie dollar, New Zealand dollar. Since then, it's been very difficult. There was a bit of a trend here, a correction, another little bit of a trend here. So there was a bit of a mini trend, a big move to the upside, but no edge. Remember, you want alignment. You want your criteria to be met. Everything looks rosy in hindsight, but it's at the time that trend is developing where you either are going to trade it or you're not. If you look at the current trend structure, it's actually quite neat. It's quite linear. So you've got moves, little pullbacks, bearish flag formations all the way here. So this is nothing unusual if you look at the actual structure of the trend. Okay, so a break and a close below this level, and we could get shorting opportunities all the way down to the figure 1. So something worth keeping an eye out for, but as it's inside the pink lines, you would want to reduce your risk. Let me just go to the chat box, make sure that everything's okay. Thank you, Adinda. Do you hold long-term multi-year investment? Scott, thank you for the question. I have an investment portfolio and I have a trading portfolio. My investment portfolio is mostly in stocks, and that requires a whole different approach because you look at fundamentals as well. So I wouldn't really get into, I wouldn't really want to get into that right now. You know, the investment portfolio is something that I tend to keep quite private for myself. What we're talking about here is trading, and what I'm sharing with you here are pretty much how I look for trading opportunities. This is technical analysis for me. And I feel that technical analysis is something that a lot of people need to get better at. There's a lot of bad technical analysis out there. And the logic, the reason behind a lot of that bad technical analysis is because there's no real, people really haven't taken the time out to understand technical analysis correctly. What a lot of people tend to do is they look for technical analysis that justifies their idea of what a trade is. So they'll look for technical analysis to justify them taking a trade. That's not what technical analysis is. Technical analysis is understanding how to break down a chart to look for high probability environments that then allow you to expose your portfolio. That's what technical analysis is. So I would tell people to focus more on this rather than investing, because investing requires a combination of technicals and fundamentals. Okay, and so once you get your technicals, then you know how to branch out into fundamentals. Remember, slow and steady, guys. All right, Scott, I hope that answers your question. Okay, let's move on. Let's have a look at some of the yen currencies, because there is momentum to the downside taking place across the yen currencies. You know, here is the Canadian dollar, Japanese yen, and I've mentioned before that if it clears 80, that is when we could start looking for shorting opportunities, and we can see there's weakness taking place. It's below the pink line, so we have that bearish bias. But just because we're below that pink line doesn't necessarily mean that you want to be taking that trade. There has to be other criteria that has to be met. So below the weekly, so we had that death cross. So below the 50, below the 200, below the 50, below the 200. So we have alignment in terms of the moving averages. But look how flat the 50 moving average is. Once it clears out of this consolidation, what we want is this trend here. Can you see this trend? But we want a prolonged trend. We don't want it to just be for, you know, I don't know how long this is, maybe like 3 weeks or 4 weeks. We don't want that. We want it to go on for months, at 6, 7, 8, 9 months. That's what we're looking for. So a break and a close below this level, and we could potentially get an opportunity. Now, having said that, would you want to trade the CAD Japanese yen? If you compare the CAD Japanese yen to the Euro yen, for example, right now, let's just go back to the CAD Japanese yen. CAD Japanese yen, we've got the 80 round number support. We've got a support level here at around 72, another support level here at 70. If you look at the history of the chart, it's quite messy, it's quite choppy. It's not, it doesn't have a history of doing well. If you compare that to the Euro yen, but open up the monthly chart, you can see that the Euro yen trends much better. It's been quite choppy in recent times. From here to here, it's been quite messy. But before that, look at that clean trend to the upside all the way to here. Quite a clean, neat looking trend. Now that it's broken through this support, which is now acting as resistance, it's below the pink lines and it's below that 120. And remember, guys, we've been waiting for this 120 to be broken. We've been waiting for it since this move to the downside here, which is back in February. Then we had March, April, May. So you can see it was just going sideways. Now it's broken and closed. It's broken below 120. It hasn't closed. It's broken below 120. But if this holds, we could then see weakness all the way down to 100 and even 95. That is a move of 2,500 pips. It's happened in the past. Very good chance it can happen in the future. So instantly, if I had to choose one between the CAD yen and the Euro yen, I've dismissed the CAD yen. The Euro yen is looking more interesting. Remember, always look for the path of least resistance. If we look at the weekly, below the 200, below the 50, we've got a death cross taking place. Below the 200, below the 50. So we have alignment across both the moving averages. The daily is looking good because the 200 is heading down, the 50 is heading down, the 50 is heading down on the weekly. What we need, of course, is the weekly 200 to start hooking down as well. So we want it to start moving like this, telling us we are in a bearish trend. But remember, the weekly is a much slower moving time frame. If I waited for that to start hooking down, I may miss a good percentage of the trend. Okay, so it's not essential for me to have the 50 hooking down. It will be nice, but it will catch up. Remember, guys, price should be your primary indicator. The other indicators that you use should be used to give you that extra confidence of the decisions that you're making. So my main indicators, which you can see on my charts here, are very simple. I use price as my main indicator. I then look at the support and resistance levels. These are my leading indicators. And I then look at the 200 and the 50 moving averages on the weekly and daily as my lagging indicators. Those are all I need. I don't need RSI. RSI is old. It's outdated. You don't need stochastic. It's old. It's outdated. You don't need Fibonacci's. Why? It's old. It's outdated. Okay. Trend lines, useful, but not essential, because price is telling me whether it's in a downtrend or uptrend or a downtrend. Keep your charts clean. Keep your charts simple. Elliott waves, old, unnecessary. Know how to look for the weekly and the daily moving in the same direction. You guys have to learn to evolve and move with the times. We're far more sophisticated now as traders, as private traders. Okay, let's move on. Now, let's have a look at the pound dollar. The pound dollar, again, is something we've been looking at. We've been keeping an eye out on. If I just open up the charts, we've been around these sort of pink line levels for the last 3 months. And I mentioned that we really want to see a continuation of the downtrend. We want to see a bounce to the downside. That's what we're having so far this month. Now, this could be for a whole manner of reasons. It could be because of Brexit. Everyone's talking about Brexit, and Brexit is the word on everyone's mouth. For me, it's all based purely on technicals. Now, of course, Brexit is likely to have an impact. What's going to happen if Britain leaves the euro? Is the pound going to go down? Is the euro going to go up? Is the euro going to go down? Is the pound going to go up? Who knows what's going to happen? There's no point trying to guess what kind of impact Brexit is going to have on the markets, because, you may get it right, but it's simply guesswork. It's 50-50. It's guesswork. There's no edge. Now, the way I would do this is simple. I will have positions open. I'm going to allow these positions to run until next week as we get closer to the situation. And I will then manage my stops accordingly. If I feel there's too much volatility in the market, then I'm just going to close my positions. If I feel that the volatility is not unusual, then I may just tighten my stops. Okay, and because Brexit's a unique situation, we don't want to be caught up in the situation that happened with the Swiss National Bank last year when they removed the peg. And, without warning, brokers went bust. Brokers like Alpari went bust in the day. Bank accounts, traders had lost significant amounts of money. We don't want to have that situation. Now, the thing about the Swiss National Bank is that it was a black swan event. It came out of nowhere. Whereas with Brexit, we're fully aware of it. So it allows you to make a more methodical decision. What I would say is don't get caught up in trying to trade it. And if you do make a bit of money, it's not going to change your life. Looking at the weekly, below the 200, below the 50, below the 200, below the 50. So we have alignment on the weekly and the daily. It's still very much sort of flat, the 50. If you look at it, it's kind of heading up. It's now starting to hook down. 200's hooking down. But if you look at the monthly chart, we've got a lot of support levels. You've got 1.4, which needs to be cleared. First of all, you've got this support level, and price has now broken through that. You've then got the 1.4 round number where price is struggling. When it clears 1.4, it's got this pivot low. If it clears that, then we've got this pivot low. So for me, I'm simply going to wait until these levels are cleared, if they're cleared. If we get a price below this level, I will then look to trade it all the way down to the figure 1. So that is a move of 3,500 pips. So I'm happy to wait, 1,000 pips for me to then trade 3,500 pips, because this 1,000 pip now, you're simply trading at a time when you could have whipsaw moves against you. It's just not worth the risk for me. Right, let's have a look at the pound Aussie dollar. Pound Aussie dollar, I have multiple short positions running, and you can see that price was in a bear trend inside these pink lines. Bounce off the pink line low, move up to the pink line close, which also in proximity to the figure 2. We've now had a bounce to the downside, and we are seeing price weaken. If it clears the low, and if it clears 1.8, then we could see weakness all the way down to 1.5 and this level here. Okay. Now, if you look on the weekly, we are below the 50 and above the 200. So we really are in an environment that is not favorable in terms of high probability environments. Having said that, we can see that on the daily, it's in trend. It's heading down quite neatly. Look at the way it's moving. Nice long red bars. I have multiple positions running along this trend. I'm already short on it. Positions are in good profit. And I will let these positions run and I'll continue to compound accordingly. Ideally, I want to see the weekly 200 cleared. I want to see the low cleared. I want to see 1.8 cleared. And I then want to see a free fall in price all the way down to this level here. And if we look at the monthly charts, you can see how well it's trended in the past. A little bit messy around this level. That's why we really do want to see this whole area cleared. Having said that, once the weekly 200 is cleared, price could potentially free fall all the way down to these levels. So pound Aussie dollar, I'm already short. Let's have a look at the pound Canadian dollar. Pound Canadian dollar, again, look at the move to the downside. Nice trend, weakness happening. It's inside these pink lines. If it clears this low, that's when we could start looking for really strong shorting opportunities. Same as the pound Aussie dollar inside these pink lines. And if we look at the daily time frame, you can see that we're below the daily 200, below the 50. So we're below the 50 on the weekly, below the 50 on the daily, below the 200 on the daily, above the 200 on the weekly, and inside the pink lines, but trending. If you take any shorting opportunities, you want to reduce your risk. And there are traders in our community who are short on the pound Canadian dollar. Okay, pound Swiss franc. Now, the pound Swiss franc may not be for everyone, given what's happened with the Swiss National Bank. And that's that move right here. So you can see this move going back to January of last year. We had this move where the Swiss National Bank removed the peg. Having said that, guys, look at what's happened since then. That is your black swan event. Look at what the market's gone and done since that day. It's just gone back to doing exactly what it was doing before. What does this tell you? What it tells you is the market does what the market does. News, etc. It'll all be factored into the markets. It'll be absorbed. If you try and understand news, if you try and get caught up in it, you're going to just end up getting lost. Whereas price action tells you everything that you need to know. So the pound Swiss franc still very much in an area of consolidation. However, if it clears this level and if it clears this level here, then we could see potentially weakness to the downside. I'm inclined to ignore these wicks. I don't think the wicks make much of a difference given that they're overextended. So I wouldn't wait for this level to be cleared to start taking short positions. If price broke below here, I would happily take short positions. Now, I know there's a lot of traders out there who'd be like, you're crazy given what happened last year. That is a black swan event. If the chart was riddled with these big overextended bars, then I would stand well away from it. But if it's a one-off event and it's unlikely to happen again, very, very unlikely to happen again, then I would happily take the trade. Having said that, if you're uncomfortable with it, there are other opportunities out there. Below the 200, below the 50, below the 200, below the 50, we have traders who are also short on this, on the pound Swiss franc, and you can see good movement to the downside. These positions are in profit. Okay, so dynamic trader community members are short on the pound Swiss franc, pound Aussie, pound CAD, pound Swiss franc, also short on the pound yen. I've been short on the pound yen since 180, well, below 180 when it broke below this pink line low, and you can see good weakness to the downside. Now, I've mentioned again, time and again, that when price was around this level, so we just open up the charts, when price was just ranging around 160, we really need to see weakness towards 150. If it clears 150, then 140. If it clears 140, 130, 120, and look at what price has done. It's now at 150. Okay, of course, we could have a bounce to the upside, but at the moment, price is looking like it wants to weaken further. Below the 50, below the 200, below the 200, below the 50. So we have alignment. We have a very strong bearish market here. Someone was making a comment on my Facebook page, one of my comments on Facebook page, and said that they went long today. Guys, look at how short-lived a long trade would be. So someone's gone long on today on the pound Japanese yen. I've been short since below 180, and I have multiple positions, not just one position. I have multiple positions running along the pound Japanese yen. A long position has done absolutely nothing when it comes to growing an account. It's just a bit of fun. It's a bit of excitement. It's the thrill of making a bit of profit. but that's not how you're going to grow an account, and that's not how you're going to achieve ultimately what a lot of people want to achieve, which is becoming a full-time trader. That's not going to happen through short-term day trading moves. It has to happen through holding and compounding, like Warren Buffett, like George Soros, John W. Henry, the turtle traders. I mentioned all of these guys before. Jesse Livermore. These are the guys that we want to aspire to be like and follow. Do you favor any indicators? I think I've yeah, Pavel, sorry about that. Yeah, I've just seen it, so I think I've answered your question. So I don't really look at a lot of subchart indicators. I just feel they're unnecessary, they overclutter. Fibonacci is too much work, too much subjectivity, and it's unnecessary. We can see pivot levels, we can see pivot points on the chart. Why do we need Fibonacci's as well? Trend lines, they're useful, but again, you have to know how to use trend lines. Don't use trend lines just for the sake of using trend lines. Understand how to use trend lines. I think I mentioned this last time. I saw a trend line on the US dollar, Canadian dollar, drawn by someone that actually teaches people how to trade, and this is how he drew his trend line. That was his long trend line, and he was telling traders to go long because there's a trend line in play. It's ridiculous. The technical analysis out there and the technical analysis being taught and passed on to people by so-called mentors, it's ridiculous. The long-term trend is bearish. Everything else suggests that it's a bearish. You've got a trend to the downside on the monthly. You're seeing support levels cleared. This was cleared. 1.3 was cleared. Support levels are being broken. Trying to go long in periods of retracement is a very short-lived way of trading. What you want is to allow the market to correct and then continue in the direction of the trend. And the long-term trend is bearish. Okay, so let's move on. Pound Japanese yen. Let's have a look at the pound New Zealand dollar. Remember, these are a lot of pound currencies, guys. You don't need to trade all of them. Trade the best looking currencies. Pound New Zealand dollar, weakness to the downside. Figure 2 is why price is struggling. If it clears figure 2, then we could see weakness. It's now trading below the 200 on the weekly time frame, so that's positive. It's below the 50, below the 200, below the 50. So it is starting to suggest a good bearish bias, but it's still within these pink lines. But the trend is down. So if you do look to take any trades, you want to reduce your risk. But I would say wait for the figure 2 to be cleared and then look to play short trades. However, does the pound New Zealand dollar look as good as the pound Aussie dollar, the pound Canadian dollar, the pound Swiss franc, the pound yen? Is this one that you want to be trading? Let's have a look at the euro pound. I missed that. Euro pound also is one that we've been keeping an eye out on. And I've mentioned that we want to see the round number 0.80 cleared and this high cleared, and then we can look for long opportunities. Look at what's happened. The market was in a bullish trend. It corrected, and now we're seeing movement to the upside. Look at the size of the green bars compared to the size of the red bars, suggesting that when the trend is in play, the momentum is really in favor of the bulls. But until it clears this high, you really want to be standing aside. Weekly, struggling to break through the weekly 200. It's above the 50. It's above the 50 on the daily. It's above the 200. If it breaks through the weekly 200. If it breaks above this high point, it will clear 0.80. It's above the high, so we're starting to have a bullish bias. It's starting to look interesting. But look, it has a bullish bias based on the high on the monthly time frame, but it's directly at the weekly 200, which is acting as a level of resistance. So it's stuck between support and resistance. Hence why price is struggling, and it has this doji spinning top formation. In addition, it's got the 50 acting as support. This isn't an environment you want to be getting caught up in. Let price clear these levels. And remember, support and resistance levels will clear when price is in a trend. Okay, but wait for this high to clear on the monthly time frame. Wait for this high point, and then we can start looking for long opportunities. Okay, let's have a look at the dollar yen. Okay, dollar yen again, starting to suggest weakness. Let me just open up the chart. Starting to suggest weakness. Good movement to the downside. Look at that correction. Short-lived with the move back to the downside here. However, given the other opportunities on the yen currencies, this is not looking so interesting. I would wait for the 100 level to be cleared, and then I will look to short this. Why the 100 level? Because we price it directly at the 50 moving average here. If I open up the charts, price it directly at the 50 moving average, you've got a support level right here. If it clears this support level, then you could potentially start looking for shorting opportunities, and you could then potentially look to trade this to 100. Okay, that is the more sort of aggressive approach. The more conservative approach is to trade below 100. Given that the pound yen is looking interesting, the euro yen is looking interesting, would this be one that you want to trade as well, or would you rather trade the other two and wait for this to prove itself beyond 100? These are the questions you have to ask yourself, guys. These are the questions that aren't often asked. Is this worth trading according to my rules? Is this worth trading according to what I have already exposed myself to? Do I want to add another yen currency to my portfolio if I'm already trading two of them? You have to have all of these ideas. This has to all be pre-thought out. This has to be all be understood. This has to be in your trading plan. It's not as simple as just going, hey, look, I'm going to just open a broker account and fund it with £500, and I'm going to get this in 6 months and retire, which tends to be quite a common approach. Okay, and the last one we look at is the Swedish krona, Japanese yen. Swedish krona, weakness to the downside. And you can see, guys, remember I mentioned last week, we want to see the round number 13 cleared. We want to see price break out of this consolidation, 13 cleared, and then we could see price free fall. That's what's happening now. We're having weakness to the downside. And just in case some of you who might be new on here, I don't know how many new guys there are on here, often I often get called a wizard. And that's probably from the book, the New Market Wizards or Market Wizards. I often get called a wizard because I usually talk to people and I say, hey, look, this is what could potentially happen. And then it happens and people are like, wow, guys, I haven't done anything special. I'm not a wizard. I'm not a genius. I'm not a mathematician. I'm not an economist. I'm not into finance. I'm not a politician. I don't have links on the inside. I've never worked for a brokerage firm or an institution. All I've done is taken time out to understand price, understand how patterns repeat, because that's what trading is about. I've understood how to develop an edge. I've understood how patience is a virtue in trading. I've understood how money cannot be made every single day. Money is made in periods. I've understood how to compound, how to focus on risk management and capital protection as opposed to focusing on the money. I've reversed the whole process as to what most private traders do, which is simply, first of all, adopt the term trading very quickly. You go into most social media platforms, everyone's a trader. Secondly, they focus on the money and not the process. And this is why people get very, very burnt and get it all wrong. On the weekly time frame, below the 200, below the 50, below the 200, below the 50 on the daily. So we are starting to see alignment, weakness and alignment. If this is offered by your broker, I know certain brokers don't offer this. FXCM, for example, they don't offer it, but IG do. I can't remember exactly, guys. I've got about 10 or 11 different trading accounts with different brokers. So I've spread my money across 10 or 11 different accounts. Some of them offer it, some of them don't. So FXCM, I know for a fact, don't offer the Swedish krona, Japanese yen, but you could trade it in IG, for example. Okay, that's everything for me. Let me have a look at the question, guys. Pavel, you said you're a long-term trader. However, for shorter-term traders, would you say using a weekly, daily, 4-hour combination, playing the mindset would be a good strategy? I would say stay well away from anything that is less than the daily time frame. There's this real unhealthy fixation with wanting to go down to the lower time frame. It's very unhealthy. I've shown my analysis on the monthly, weekly, daily. So my instant logic, if I saw this, would be to replicate this on the monthly, weekly, daily. Why would you want to take something that clearly works and is proven to work? Why would you then want to try and adapt it onto the weekly, the daily, the 4-hour? It just doesn't make sense to me. This is something that you guys need to get away from. And Pavel, you're not the only person that asks me this. I literally get asked this question every day. Every week, people always messaging me going, listen, your long-term trading strategy, I can't hold for that long. I need money. I've got to pay a bill. I'm not saying this is you, but these are the excuses. I've got rent to pay. I've got food. I've got a family. I've quit my job. I'm a full-time trader now. it's suicidal, guys. Okay, money and growth is not going to be made on a lower time frame. This idea of lower time frame trading has only really come about because of software, because of the internet. And if you are trying to copy the banks, and if you hear about all of this high frequency trading and machines, etc., guys, how much money does a bank have? Banks have billions. You're coming in with thousands, I'm guessing. Some people even have hundreds, which is, you shouldn't be trading if you've got hundreds, right? You need to have a good starting amount so that you can position size correctly. You can manage your risk. You can manage your stop. You know, you need to have at least £2,000 to £3,000 or dollars or euros or that equivalent in your trading account. You want to trade with micro lots, and that's how you want to learn, and that's how you want to practice. You don't want to be going in with £100 and losing it, £100 losing it, £100 losing it. It's all going to add up. So there's a lot more to this than just simply, you know, coming onto free webinars. You know, this what I've shown you is technical analysis. You probably, and I'm hoping you guys have learned a lot from my webinar. I generally get quite a lot of positive feedback from the emails that I get. But thanks, Pavel. But you know, this is just technical analysis. I've not shown you anything on how I've managed my entry points, my stop losses, my risk management, how I compound, how I exit, how I identify where the money is, you know, how I move from foreign exchange to stocks to commodities, the different strategies. Am I trading breakouts? Am I trading pullbacks? You know, sometimes I go down to a 4 hour to find an entry. But that doesn't mean that I exit on the 4 hour. I can find an entry point on a 4 hour time frame, but I can still be in that trade weeks or months later. So there's really is a lot that goes into this. How I do my analysis, I prepare on the Sunday. What do I look for every morning and every evening? I don't spend more than 10 to 20 minutes a day trading Monday to Friday. This is the other thing. If I'm looking at the monthly, weekly, daily time frame, I don't need to be looking every minute. I'm not on my broker app on my mobile phone wondering whether I'm in profit or in loss. 1 minute being happy, I'm in profit. Next minute, money's gone down. That kind of lifestyle is not what I'm about. And this is what trading's not about, guys. Trading's about empowerment. But for that empowerment of lifestyle, you have to give it the time, the love, and the respect it deserves. Got to build this from a foundation of love and knowledge, not, you know, desperation and money. Because once you get that foundation, the money will roll in. So, you know, to reiterate what I've said, stay away from the lower time frames. Don't try and adapt this to the lower time frame because it's not going to work. What you're going to be doing is, let's think about it. I've drawn support and resistance on the monthly. So you're then going to draw your support and resistance on the weekly. I look for trend direction and alignment between the weekly and the daily. You're doing it between the daily and the 4 hour. Now, there's a fundamental problem with this. The 4 hour, there's a lot more candlesticks. There's 6 4 hour candles for a day. So that's a lot more noise, and that's a lot more support and resistance levels that you're going to potentially have to draw. It just all gets very, very confusing. Okay, so that's my answer. Thanks for the question, by the way, guys. There's a few people asking me questions here. Are there any other questions before I end today's webinar, please? I appreciate the questions as well, because I don't often know how many people are sat in on here, and I only ever find out at the end of the webinar when people email me and want to know more about the training and the software and stuff. So, guys, if you want to contact me, here is my email address, zaheer@tdtpro.com. Please drop me an email. I'll just direct you guys to a few links. So I've already directed you to trendtrader.pro/apprentice. Please check this out for some apprentice training. It's £99 for a month of training, guys. £99. You get a strategy, community support, training in foreign exchange, trading in stocks, video portal. There's just a lot that goes into this. So for £99 a month, you know, I would definitely check that out. Trendtrader.pro/ebook. Guys, if you have not read this ebook, then I'm just going to put the link here. You need to download this ebook and read it, because this will change everything that you understand about trading. This is written by Anne Chapman. This is a lady who taught me back in 2007. Amazing lady. There should be more people like Anne Chapman. And I'm not just talking about women. I'm talking about men and women. There should be a lot more men doing this properly. If you are on Twitter, please follow me at Dynamic Trader on Twitter. And on Facebook, if you search for, sorry, I haven't brought it up, but if you search for FX stocks trading community, that is our Dynamic Trader page. You could even search for Dynamic Trader. There'll be 2 Dynamic Trader pages. Please like both of them. Okay. I think that's it, guys. Right. Okay. No more questions have come through. I will end the webinar here. Thank you very much for your time. Thank you, administrator, for sitting in. Thank you for the questions, guys. And, you know, be smart. You know, remember, we do have Brexit coming out next week. So just be smart with the way you trade. Don't trade Brexit. Be smart with the way you trade. Different approach. Thank you. Take care. Bye-bye.